Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. But don't forget that today is Friday and today is going to be a learning Friday as we get Buy Now, Sell Now Pathshala for you. But before that, let's have a look at what the markets are up to. So Cheryl, feels like the markets are in the Friday mode.
Absolutely, Shrishti, in the Friday mode. Good morning to you. And before we kickstart talking about what's happening in the markets, a brand new series, let's talk about where our conversation we left yesterday, Shrishti. I did tell you we will discuss about how exciting the birthday plans were yesterday, isn't it?
It was great. Actually, Cheryl, it was great with all the love that I got from you, from our team, as well as from our viewers. That was really heartening to see.
That's great. And if you look at the markets, yes, if you look at markets yesterday also, I said that hopefully they will side the birthday girl. They indeed did. You saw a sharp rally towards the close in yesterday's trading session. And today we are building on to gains. You had Nifty that touched even the 80,400 mark. As well, mid-cap index, Nifty mid-cap 100 is at a record high level. It hit a record high level on an intraday basis. Talking about Nifty Bank, that's trading a tad subdued in today's trading session. If you look at the Nifty Bank, it's trading lower when you compare it to the benchmark indices or even for the broader markets for the matter being. Talking about the list of gainers, so you have Hindalco, Reliance Industries, Tech Mahindra, Divi's Laboratories, as well as UPL that are among the top gainers on the Nifty, but on the losing side, you have ONGC, Grasim, Power Grid, as well as Bharti Airtel. A lot of individual stocks moving on back of earnings. One of them is Page Industries, sulking in today's trading session, worst day in about 15 years, and that's because of weak and dismal set of quarterly numbers coming in for Page Industries. You have a lot of brokerages that have gone ahead and downgraded the stock, cut the target price. So Page Industries bearing the brunt of weak set of earnings, 10% downtick right now. One point in time was down about 15% or so. Vector Foods is another counter that you need to watch out for. It also came out with a good set of numbers. If you look at the stock price right now, it's trading higher by about 10% as we speak. Let's take a look at what the other sectoral indices are doing right now. And among the sectoral indices, the only one that you will see with the shade of red, apart from banks, is the realty index. But IT index, that's the one that's leading from the front. 1% uptick coming in for the IT index. Metal, FMCG, all of them are participating in today's market movement, Shrishti.
Okay, so that was the list of all the shakers and movers, but let's move on and let's welcome on board Kunal Bothra. He's joining us live into the studios with a very interesting topic onto the technical front. So Kunal, take it away.
Thank you so much, Shrishti, and don't forget the lunch post your birthday. So I'm still waiting for that. Onto the topic for price patterns. So last couple of weeks we were discussing about the candlestick patterns. So this is a price pattern indicator for many analysts who look at prices specifically, not at the indicators. So the topic for today is triangular patterns, and I have taken two examples. One of them is a very recent example which is actually getting formed, and this is the charts for Bank of Baroda. Now triangular pattern generally means that after a rally, the stock gets into a zone of consolidation. And in that consolidative zone, the range for the stock narrows significantly. So like this is what we've seen for a stock like Bank of Baroda. From the March lows of 155.60 approximately, the stock went into an upward trend, formed a pattern of higher highs and higher lows. And then in the phase of consolidation, the stock went into a range bound action. As you can see that the earlier range for Bank of Baroda was approximately around 15 rupees, 190 at the top end, 175 at the lower end. And the range has now gotten contracted to 8 to 10 rupees. So as now the stock spends time in the consolidation and the range contracts, that's what we call it as a triangular pattern. So sooner or later, the breakout could happen for Bank of Baroda. The way in which the stock enters into the consolidation, we generally expect that that would be the same way the stock would break out of that consolidation. So 185 could be a breakout point for Bank of Baroda, and post that, we can expect the stock to hit back levels of 200 plus as well, which could be a multi-year high for the stock. There's one more example, which is from the historical perspective, which we've outlined for a Federal Bank. Again, a classic indication. This is where we've already seen a breakout. So after a decent rally, the stock went from 25-30 levels in 2014. It went into a phase of consolidation. This was a multi-month consolidation. Look at this for the stock consolidating in a band of 3 months in a very tight band. The moment the stock managed to break out of this consolidation, we see the stock moving up higher by almost 10 to 15%. So that's the power of a strong triangular pattern. It's an indication generally that the stock comes out of a consolidation and breaks out in the direction of the trend.
so that's something new that we've learned in today's edition of BNS and Pashala price pattern. That is the triangular price pattern is what we've learned in today's Pashala edition. But on that note, we slip into a break on this edition of Buy Now, Sell Now. But before that, remember viewers, we at Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. And as we move forward on the path of integrated, equitable development, which is all-inclusive, all-pervasive, universal, and that one strengthens not just the Indian economy, but the global one as well. And to pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from the politics as well as global markets, not just that, economy, as well as the corporate world. So get ready to catch all the action here on Times Network. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, if you don't find us live on Twitter, don't be hassled. You can catch us live on etnownews.com. That's where all the action is. Also, remember that right after the show, our entire video will be uploaded on YouTube. So in case you've missed listening to your query, you can go back and catch it on our YouTube page as well. But for now, we are live on your TV channels, on etnownews.com, as well as on a Facebook profile. So do mention your name, the stock that you're looking to invest in. If you're already invested in a particular stock, then do remember to mention the buy price, the quantity, as well as time horizon that you're looking to hold a particular counter, because that will help our experts to help you better. And talking about experts, we have Kunal Bothra as well as Avinash Gorakshekar joining us on the show. A very good morning to you, Avinash, as well as Kunal. Thank you so much for joining us on Buy Now, Sell Now. And let me take the first query to you, Kunal. This one is coming from SK Saran from Bangalore, and he wants to know, as per technical chart, at what price can a fresh entry be made into Finolex cables as well as Finolex Industries for a positional or a long-term investment?
So Finolex cables, specifically, I think that stock you can look to buy if it comes back towards its 200 DMA. I think it's at 700 to 750 levels, and I think the stock has just started a phase of correction for itself. So I think you should not be in a hurry to buy the stock and wait out for at least another 8 to 10% correction for it to come back closer to its 200 DMA. For the other stock, I think it's Finolex Pipe. That stock, I think, closer to 174, 175 where it's trading right now. Again, it's come back towards a mean. So I don't expect the stock to correct significantly from current levels. You can start buying at current levels, and even if the stock rises up to say 180, 185, that could be another level we can look to even add further.
Okay, moving on to the next query, and Avinash, a very good morning to you. The first question that I have is coming from Rajesh Maheshwari, and he's holding 50 shares of Dixon Technologies, but at a price of 5,025 rupees. So in what time he should expect to recover those losses, or rather it's apt to book losses at this point in time, and any short to medium term outlook on the same?
Yeah, I think Dixon Technologies recently reported a very strong set of numbers, in the quarter 4, and I think of late the stock has shown a good bounce, from lower levels. I would be quite positive on the company, if one takes a longer term view of the next say 12 to 18 months, because within the EMS space and the electronic outsourcing space, I think Dixon has a very large customer kind of bouquet. They have been introducing several new products in the market. So I think overall, the outlook for the next 12 to 18 months looks pretty positive. I think the investor, if he has a 12 to 18 month view, I think he can hold on. He can also try to average some quantity on the lower side because his buying price has been quite high. So I would believe that keep a time frame of at least 12 to 18 months. And then after averaging a little stock, he could definitely expect his risk reward to get better over a longer period of time.
Coming from Subrata Mukherjee, writing to us from Kolkata. Kunal, I'll take this one to you. He wants to buy Bharat Forge for the medium term. Does it make sense to buy Bharat Forge right now? If not now, then what is the correct price?
So, see, Bharat Forge as a chart looks attractive from long-term play. The stock has come back towards, I think the 50-day moving average or slightly below that. So, price-wise, it's at a very attractive point. But my only question is that whether you're expecting, Bharat Forge to outperform most of the other peers in the same sector from the defense pack as such, or whether you're looking at Bharat Forge as a formidable mid-cap name, which can tend to outperform most of the other pairs? I think that would be a bit of a question mark, because I believe there are much more better candidates which can actually give you stronger returns, whether it's from the banking name, something like IDFC First Bank at 66, 67 levels looks very attractive. So I'm not sure the exact rationale of buying Bharat Forge. If you're specifically building a portfolio and looking to add Bharat Forge, then it could be a good level to buy. But if you're looking to buy as an alternative, I would suggest IDFC First Bank at current levels.
Okay, Avinash, the next question is from Ravi. He's a long-term investor and he wants an advice on BEML. He's holding shares from a price of 1373 rupees. Sitting at a mild gains, should he book profits in this one or rather make a switch to Prince Pipes? What will be your advice?
No, I think as far as the PVC pipe sector is concerned, I think there's a lot of challenge and headwinds on the PVC prices. So I think most of the PVC pipe companies have not shown very strong numbers. As far as BML is concerned, I think the near-term trigger would be the strategic divestment which the company has been talking about. They have already divested the real estate business, which is now listed separately. I think if the investor has got a 12 to 15 month time frame, I think hopefully one could expect the strategic divestment news to play out, and that could definitely trigger a good upside. On the business side, they've got a large exposure on the railway side, which I think is also going to help them. So I think net, I think the investor should hold on. I think you should not be in a hurry to book out, as of now.
Coming from Jaya, writing to us from Bangalore. Kunal, she has 45 shares of Dr. Lal Path Labs at a price of 2260 rupees per share. On the charts, how is it looking for the long term is what she's asking. But she's asking, is there any chances of the future uptrend on this particular counter? So on the medium term time horizon, how are the charts for Dr. Lal looking like?
So corrected by 50% from 4,000 levels to I think sub 2,000 levels where the stock corrected towards, now on the path of recovery. The recent charts over the last I think 2 months specifically have been a bit more better for Lalpath Labs, and I think the stock has formed a good base at 1800 mark. There are signs of volume pickup for Lalpath Labs. So the ingredients are set for the stock to get into a recovery phase. I'm not sure whether the stock would probably scale past that 4,000 levels in a quick span of time. So that's the only concern. That you'll have to be a lot more patient to for the stock to come back towards 4,000 levels. So ideally this should be one of the stocks which should be part of your a smaller part of your core portfolio. Yes, you can look to maybe add or buy at current levels, but again don't have a sizable quantity into such kind of a stock which has been beaten down significantly, and it's just in the starting phases of maybe going through some sort of additional recovery for itself.
Okay, Kunal, once again the question is for you. Arvind Reddy wants to know your view on Jupiter Wagons and can he invest in this counter at this time?
I don't track the stock, Srishti, so I'll skip that.
Okay, Avinash, would you be able to advise him on this one?
Yeah, I think Shrishti, the company has posted a very strong set of numbers for quarter 4. In fact, they have an order book of almost 3,000 crores, roughly about 6,000 odd wagons, and it's one of the wagon manufacturers apart from Titagar, which has got a large mega order from the railways. My sense is that they also manufacture bodybuilding bodies to the commercial vehicle sector. So even from the CV sector, the business is growing quite well. The stock has appreciated quite significantly. So I would suggest that if one has to buy the stock, I think one should wait for a sizable correction to enter the stock. Although long-term prospects appear to be quite strong, but I think in the very near term, the valuations have become slightly pricey. So at best, I think one can buy on a decline, not at the current price level.
Okay, this one is coming from Puneet. He's writing to us from Delhi. Kunal, Sham Metallics, he's bought at 310 rupees per share. He wants a short-term view. Also, any targets that he can expect on this particular counter. I'm unsure if you track Sham Metallics given the fact that it is a fairly recently listed counter.
Yeah, not a recently listed counter as such, but then I think it has a distinct history. The concern for the stock is the illiquid nature. I think the daily volumes are a lot less for the stock. I think on an average it's some 50,000 to 60,000 on NSE. So that's the only concern in terms of liquidity. But then the recent charts are quite positive for Sham Metallics. It's formed a bullish flag pattern. The last 2 months, I think from the month of April mid, the stock has been consolidating in above the 200 DMA. So this flag pattern, which seems to be getting into a positive sign for Sham Metallics. So I think the breakout could happen on the upside, and maybe the stock can come back towards 330, 335. That could be a near-term target which you can keep for the flag pattern for Sham Metallics.
Okay, moving on, and Avinash, the next question is from Bala, and he has a question on why HDFC as well as HDFC Bank are showing continuous weakness, and what is the market concern on the blue chips right now? And other than that, are these HDFC twins good names to enter at this point in time?
Yeah, I think history possibly, the markets are still waiting for the mega merger to get complete. But I think over the next, say, 3 to 4 months, my sense is that the consolidation process will be complete. And I think the best part for HDFC Bank post the merger is that there could be a lot of synergy of acquiring HDFC customers for the banking business. And I think if you see the standalone performance of HDFC Bank, I think they have been consistently compounding about 20% growth, a very good ROE, a very good ROA, plus very minimal asset quality. So I think you need to have a little more patience when you invest in HDFC Bank now, because probably from the month of August or September, we could see consolidated numbers coming out, and that could possibly change the profile of the stock and give it a significant amount of re-rating. So I would believe that if the investor has at least a 12 to 18-month time frame, he should accumulate the stock at the current level. I think longer term, definitely a lot of value can be made here.
All right, so that's the take coming in on HDFC. But on that note, actually, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking all of the stock-related query viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, we are live on etnownews.com as well as your TV screens, or you can catch the entire episode later on YouTube. But let's get going with all of your stock related queries then. And this next one that I have is coming in from Deepak. He's writing to us from Kerala, and he's holding Federal Bank at a price of around 129 rupees per share. Kunal, he wants to know whether he should average from the current levels or wait for further correction in this particular counter.
Well, just hold on to the existing quantity. No need to average. If you're looking at averaging a private sector banking name, I would suggest IDFC First Bank as a better alternative. The stock is in momentum. The volumes have been very attractive, and more importantly, there has been a massive short covering in terms of the relative open interest with respect to the previous expiry. So that indicates that the upside could be significantly higher for the stock, and I think it makes a lot of sense because Federal Bank is drifting downwards. The stock has broken below its 200-day moving average as well. So there are two divergent trends. One is a stock which is showing signs of weakness, and the other which is showing signs of strength. It's always better that you buy strength rather than weakness.
Okay, taking the next query then. Avinash, the question is from Parvinder Singh, and he is holding Mayur Uniquoters 70 shares at a price of 615. Can he continue holding these shares for the next 6 to 8 months? And what's the advice, what's the outlook for this?
Yeah, I think Mayur Uniquoters is a well-known auto component player. Basically, has a very strong presence, in the seating system segments of the automotive passenger car sector. And recently, the company management has sounded quite positive, for the current year, saying that not only the raw material cost price, input price, are easing, but even volume growth is expected to be pretty strong. So I think despite the fact, that the investor has purchased the stock at a slightly higher level, I think a 6 to 8 months time frame would be a little shorter. If he can probably hold on for the next, say, 12 to 18 months, I think he could definitely expect a decent risk reward here. So would prefer to, tell him to hold on for a longer period of time, and then definitely expect not only his cost price, but a decent profit from his, buying levels.
Let me actually take a moment to sort out all the queries that we are getting on Page Industries, because as of I know, I've got a couple of them. One is coming in from Mukund Sharma. He already has Page Industries, 25 shares at a price of around 43,000 odd levels. He wants to know whether he should average, hold or sell. I have another query that is coming in from Siran as well. He wants to know whether he should average Page Industries right now. This one is from Padma as well, and Suresh. All of them are asking one simple question, Kunal, whether they should look to average Page Industries right now, given the fact there's a sharp fall in the stock price. And apart from that, Suresh is asking whether he should buy afresh.
See, I think you should not look to average as well as buy fresh, at least as of now, because we've seen this so many times that when a stock opens with a sharp gap down, the stock tends to underperform for at least another 3 to 4 weeks, because on just a sharp gap down, there is no immediate adjustment towards portfolios for many institutions. That takes a process of at least couple of weeks, and that could probably lead to some bit of more selling pressure. If the markets also show signs of weakness, then the selling pressure or the intensity of selling could be a lot more higher for stock prices. So I would suggest to wait out for at least another couple of weeks. Difficult to anticipate that what prices the correction could settle into. Maybe the correction could halt at 35,000, 36,000 mark as a base for Page Industries, or it could settle maybe another 500,000 points higher from current levels. But that could be a good confirmation point rather than just buying at current levels and waiting on hope that the stock would get into an immediate recovery.
Okay, moving on to the next question, and Avinash Pradeep from Kolkata is holding another auto ancillary play, that is 50 shares of Suprajit Engineerings, but at a price of 340 rupees. What's the advice going ahead? Should he continue to hold on or book profits at this time?
No, I think Suprajit Industries should be engineering should be held on, Srishti, because I think it's a very large player in the automotive cables market, especially catering to the two-wheelers and the tractor segment. In fact, they have a subsidiary called Phoenix Lamps, which is also doing pretty well. So I think the investor is making a decent amount of money, but looking at the kind of uptrend we have seen in the volume growth for most of the two-wheeler majors, hopefully this year we have a good monsoon. Then I think you could see further acceleration in the two-wheeler market. So I think continue to hold. Better prospects could come in for the year FY24.
All right, this next one that I have is coming in from Raghuram, writing to us from Bhubaneswar, has about 500 shares of Saxoft 200 at the price of 200 rupees per share. Can hold for 6 months, Kunal?
Well, I would not suggest a buy. I think at current levels specifically, because the stock has moved significantly higher. The 200 DMA, for example, is at 133. Stock is at 241, which means a divergence of almost 100 rupees, 110 rupees for the stock price from that 200 DMA. And those kind of trends and divergences, they don't sustain for a long period of time. Eventually, there's going to be a pullback which could probably shape up into the stock. So buy on corrections for Saxoft, and even the RSI, for example, is significantly lower this time around as compared to the previous reading of 240 for Saxoft. So on both occasions would suggest a wait and buy on corrections, and especially when the stock corrects up to a 200 mark.
Okay, Avinash, the next question is on ITC, and this question is from a long-term investor who is holding ITC since 2010. His name is SSV Chalam, and he's holding ITC from an average price of 150 rupees. So at this point, should he book partial profits or continue to hold on?
No, I think some partial profit booking is definitely essential. I think he's bought the share at a very attractive level. And I think despite the fact that ITC would continue to do well, especially across all their product segments, I would suggest that he should at least take out his capital so that the remaining shares become completely free for him. Prospects continue to be solid, but I think some amount of profit booking is definitely desirable.
It's coming from Dhananjay, Kunal, and he's asking which is the best pick for a swing trade from technical perspective, Polyplex, Gland Pharma or Aavas Financials?
Gland Pharma, I would not suggest a buy. Even Aavas Financial, I think the stock has corrected towards the 52-week lows, I think at 1380, 81, where the stock is trading right now. Same would be the case with Polyplex. So, frankly speaking, neither of the three.
Okay, Kunal, what's the outlook on SBI Cards? Matthew from Kochi is holding shares from a price of 820 rupees. At this point, should he continue to hold on, or any advice on averaging out further?
Yeah, I think you can look to average at current levels. I think it's shaped up quite well in this month. SBI Cards, it's recovered, I think, some 16%. Still a long distance away from the all-time high levels. But I think this is the second such kind of a strong candlestick pattern for SBI Cards over the last 12 months. And previously, the last time around, the trends failed. But this time around, I think the probability for success for SBI Cards in terms of an upside is pretty much high. So I think if you've bought at lower levels of 800, you're already sitting on a 10% plus profit, but you can continue to average at current levels as well.
All right, finally I get to ask a question to Avinash then, and this one is coming from Hemant Avinash. He's saying that he's holding about 150 shares of Nexus REIT, which just got listed recently. He wants to know that considering the boom in the real estate, how is the company looking for the next 5 years? Makes sense to hold and add some more into his portfolio?
See, I think, my sense is that Nexus Select is not a manufacturing company. It's a REIT which is basically play on the real estate kind of assets which they hold. Normally in these kind of companies, I think one should look at the the yield factor rather than looking at the earnings growth factor. This kind of stock is not a growth stock, but it can only give you some sort of steady cash flows over the next, say, 3 to 4 years. So I think in case the investor is looking for some sort of huge capital appreciation, then I think this stock may not provide him that kind of opportunity. It's only meant for those investors who want a steady cash flow, and that is definitely something which Nexus can provide significantly, because their leverage on the balance sheet is significantly low. The management has also hinted that due to that, they could possibly buy in more retail assets and ensure that their cash flows increase. And typically, such kind of companies distribute almost 90% of their profits to shareholders. So that is going to be the icing on the cake. So looking at that, I think this can be held on, but don't look at it as a pure equity investment.
That's the view on Nexus Select Trust. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. As you can see, before that, the markets are near the day's highest point. You have Nifty that is actually trading higher by about 100 points. It's at 18,400, upwards of 18,400 as we speak. But let's move on. Let me take your next query. Let me take the next query then. And this one is coming in from Rajan from Delhi. He wants one-year target for Ircon and ITD cementation, and which one is better to invest in, Kunal?
Both of them are attractive. ITD cementation in its own space has done reasonably well. I think it's trading at a multi-month high. It's done a very good performance in terms of prices over the last 3-6 months. Ircon, the entire railway space, has done exceptionally well. So I think you can look to maybe go for a 50-50% on both of them. But then also I think look out for adding some adding both of these names on dips, on corrections, because of the steep run and the rally these stocks have shown in the last 3 to 6 months. You also have to ensure that you buy it on staggered phases. Yes, these stocks have corrected some 5-10% odd from their recent swing highs, but then there could be a scope of another 5-10% correction further where you can look to average further.
Okay, Avinash, the next question is from Chandrasekhar, and he's holding 150 shares of Suntech from a price of 451. What should he do with this investment, and any price to average this counter further so that he can recover his losses?
I think Suntech is a very well-established real estate player, operating in the Mumbai market. In fact, they have now also commissioned affordable housing kind of project. My sense is, if the investor can hold on for the next, say, 12 to 15 months, definitely the real estate market has picked up, and that should benefit Suntech also. There's a decent amount of pipeline inventory and a kind of decent projects which the company is doing. If the investor wants to average, he can even look at averaging at the current odd levels. My sense is that FY24 should be significantly better compared to FY23. So definitely a lot of earnings growth and a lot of new projects could add into the revenue for the company. So I would believe that if he wants to average, he can average at the current levels. Definitely a good investment story, but yes, give a time frame of at least 12 to 15 months from now.
We had Kunal who spoke about Gland Pharma, said that he would not look to buy this stock right now for a positional trade. But Mr. G.K. Das from Bhubaneswar wants to know whether it makes sense to buy Gland Pharma right now, Avinash, for a period of 3 to 5 years. He's saying he's okay and will be happy even if the stock appreciates by about 20%. And actually, shockingly, I just realized that Gland is actually fallen below the 1,000 rupee mark as well now.
No, I think, Cheryl, I would also like to second what Kunal has said, that I would not like to buy a falling life, because considering the fact that numbers for Q4 and the commentary given by the management has been extremely, cautious as well as negative. Most importantly, ever since the management mentioned the stake sale, the market is little uneasy and not knowing what exactly is the strategy of the company. So despite the fact that stock has corrected from almost 2,000 odd levels to below 1,000 odd levels, I think it makes a lot of sense to wait for at least another quarter or two and look at the scenario on a very real time basis rather than preempting now as of now. So I would believe it's not the right time to buy this stock as of now. It's better to wait for the water to settle down, and then probably after maybe the June or the September quarter, one could take a fresh review and then review the call.
Kunal, the next question is from R.K. Jalan, and he wants your advice on two counters, IDPI Bank as well as India Cements. Should he buy any of these for short term?
IDBI Bank, yes, I think I would suggest that as a buy. I think it's looking at is looking as a much more better chart or a renewed chart than what was maybe a couple of years back for IDBI Bank. So the recovery is quite strong, stable. The stock is getting into a breakout mode every now and then. The only concern is with the string of news flows which gets attached towards IDBI Bank in terms of disinvestment. So that's the only concern or a hindrance to the trend. India Cement, on the other hand, I would not suggest that as a buy because the stock has consistently disappointed. Look at this from the 2022 highs. The stock was almost at 300 levels, and from there it's corrected almost half to 180, 185, where it's trading right now. So it's a stock which is showing signs of weakness. I would suggest an avoid on India Cements, but probably a go ahead for IDBI Bank.
Okay, this one is coming from Satya and wants to know about Voltas on the charts. Kunal, his price is 800 rupees per share. He wants to know what's the next support and the resistance for this one.
So 780 is a good support for Voltas. I think the stock seems to have ended its phase of sharp correction, and that's where I think twice the stock managed to take a bounce or a support from. So 780 is a good base from current levels, and my sense is that Voltas may not run up in a very speedy kind of a manner, but I would believe that maybe it will take another couple of months for the stock to even come back towards 880, 900, looking at the slow pace of price correction as well as a possible uptrend for the stock price. So if you're okay with that kind of a time frame, then it makes sense to buy Voltas.
Okay, Kunal, S. Gopalakrishna is holding shares of Praj Industries and 1200 shares at a price of 370 rupees in today's good up move in this particular counter. Will that be a breakout for this one, and should he buy more at these levels?
See, you can look to buy more or add more for Praj Industries, and I look at it this way that over the last 3-4 years from 2020 when the stock was at 50 rupees to a point when the stock rallied up to almost 450. So when a stock runs up 8x, 9x in a matter of 1 to 2 years, it's bound to get into a time-wise correction. Now, it's possible that the stock may continue to behave in this time-wise correction, say for another 6 months to 1 year. So if you're okay holding with that stock and that kind of a time frame, then it makes sense to average the stock at current levels. But my belief is that this time-wise correction could result into a breakout on the upside, possibly in the next 1 to 2 years.
Okay, Avinash, this one is coming in from Venkatapati P from Chennai, and he wants to know about Foseco India, a long-term view. He has about 300 shares that he purchased since the IPO. Do you track this one?
Yeah, I think Foseco is a MNC company and which is a leading foundry in India. In fact, most of the foundries, Cheryl, are doing pretty well, considering that there's a lot of demand from the automotive and the auto component sector. Since the investor has held on from the public issue time, I'm quite sure that he's made a huge amount of profit and capital gains on his original investment. So I would believe that in case he doesn't require funds, I think keep on holding the share. Better numbers are expected in FY24 also, considering the kind of uptick we are seeing in the automotive and the auto component market. So better prospect side. So continue to hold.
Avinash, one more counter that is showing good up move is Elecon Engineering, and Ajay Kumar wants to know how much more upside is left for Elecon Engineering and any targets to keep in mind. Avinash, this question is for you.
I think Elecon Engineering has significantly appreciated Srishti, and I think if the investor has made a decent amount of money after holding it, I think he should book out. But if he's looking for fresh investment, my sense is I think he should wait for a sizable correction. The stock is now near to its all-time high, and I think although order book is great, the performance in FY24 is also expected to be good. I would believe that a better risk reward can possibly be possible if the stock corrects, significantly, and then that could be a good entry point. So I think at best, wait for a decent correction to buy in, but definitely long-term prospects appear to be good.
All right. Moving on, then let me take this one coming in from Jaya Krishnan, and Jaya Krishnan has asked me so many queries, but let me try and take one of them. And Global Spirits, Kunal, can he buy Global Spirits at current price, and will it break out and go up substantially?
See, I think it's a good choice, from the list of the liquor space, because Global Spirits has done exceptionally well. I think in 2020 lows, it was one of the best performers, I think, in terms of percentage gains from the entire space. So it looks attractive. The stock has recently managed to come back above its 200 DMA, given a breakout, moving average crossovers. All of them are looking quite attractive for Global Spirits, so you can look to buy. I would probably even suggest even United Spirits at current levels of 830, 840 plus where it's trading. Even that stock looks attractive. So both of the names you can look to add.
Okay, Avinash, the next question is from Balin and he's holding shares of EPL from a price of 195 rupees. Whether to hold on to this particular investment, rather make a switch to any other name.
No, I think looking at the kind of performance from the FMCG market, Shristi, I think EPL definitely would gain significantly. They have a large market share for their product vertical, and I think they also have a very large exposure to the Europe and the European markets. I think after a very long time, we have seen an uptrend in the stock, possibly because markets are expecting that the FMCG market in the domestic markets, especially in the current year, should do exceedingly well. So I think you should hold on. It's a MNC company. Blackstone holds a majority stake here. So I would not be surprised that possibly from the second half of FY 23-24, one could expect a decent amount of re-rating here. So continue to hold.
One is coming in from Sandeep, and Sandeep is striking the right tone. He's wishing all of us a happy weekend. We know that Kunal is traveling this weekend, and if you had watched ET now from 8 a.m. onwards, you would know where he's going also. But Sandeep wants to know how the chart's looking for Cummins India. He's holding shares at around 1,448 rupees per share, as well as L&T 2,216 is the buy price. Kunal, short term.
So L&T is more interesting bet. Cummins on the other hand, the stock is already at a fresh 52-week high. It's come out of a very sharp corrective phase. The indicators are not very attractive for Cummins. So I would probably suggest that as a skip. Maybe if the stock corrects 5% or 100 odd rupees from current levels, 16, 20, 30, then it could probably come back towards a good buy zone. But L&T has already done that. I think from 2,500 levels, the stock has corrected towards 2,200 mark. So you're buying a large cap name, a formidable name at a 10% discount from its previous price. I think that's an attractive bet.
That's the view on L&T, but let's move on and start taking all your stock-related queries in the rapid-fire session. And the first question, Avinash, is on Tata Steel. Question is from Ravi, and he's holding the shares from a price of 115. Whether to hold or sell?
I think he should better exit because I don't think there's going to be a significant upside here. So better to switch to, say, let's say Tata Motors, but book out of Tata Steel.
Okay, Kunal, Anand N from Gurgaon has 7,000 shares of Zomato at 58.5. He's seeing 15% profit. Should he sell, hold, or add some more?
Hold is what I would recommend.
Kunal, how are the charts looking like for IRB Infra? Kaushik Mitra is holding the shares from a price of 28 rupees 50 paise. Whether to hold or add more?
I think you should definitely look to hold on as well as look to add at closer to 26.5.
Kunal, another viewer who's bought Birlasoft 500 shares at a price of 270 rupees per share. Should he hold or sell? Promote from Trishur, this is.
I think it's an excellent chart, has confirmed a base, would suggest a hold.
Avinash, Rohit wants to know any long-term bet which he could enter today.
I think you could look at Mahindra and Mahindra. I think definitely a decent risk reward can be expected over the next 6 to 12 months.
Okay, this one is coming from Shiva from Muscat, and not just Shiva, a lot of other viewers also asking about Polyplex. For the long term, makes sense to stay put or invest in this one, Avinash?
So I think Polyplex should be avoided. I think very poor numbers, and I think the entire industry is suffering from a oversupply. So I think at the moment, avoid.
Okay, Kunal, Prakash wants to know, can he buy BDL for short term?
Yeah, looks attractive. This entire space has also done pretty well. 1,040.44 is where it's trading right now. Would suggest a buy.
Okay, Kaushik Mitra from Mumbai is holding TTK Prestige at 1,187 rupees per share. Kunal, he's suffering a huge loss in this one. What should his strategy be now?
Hold as of now, but then closer to 750 to 780 levels is where you should look to exit.
Kunal, this is going to be an easy one. Dr. Shyam is holding Vector Foods from a price of 539 rupees. What to do?
Hold.
Okay, this one is coming from Rajeshwari from Chennai. TTML is the stock. 200 shares at 130 rupees per share, facing huge loss. Add, sell, or hold, Avinash?
I think one should exit here.
Okay, but with this, viewers, it's time up on the rapid fire session as well as buy now, sell now. Thank you so much, Avinash and Kunal, for joining us and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together, and wishing you a happy weekend. But don't go anywhere. The market action continues on ET Now, and markets at noon will take the action ahead.